I figured out a way to make money in the markets that doesn't involve technical analysis or paying attention to the news. I noticed that every couple of years the cryptocurrency market crashes and people either cashed in on big gains or suffered substantial losses. The driving force that causes these massive waves in the market is largely dominated by the news. And once the scales are tipped towards sell by the world's largest influencers, this causes a massive panic sell-off, which in turn crashes the market. What most people do is buy into the hype when the market is already high and cryptos are headlining in the news, and then they're forced to sell when the price crashes. So essentially, people are buying high and selling low. What they should be doing is buying when nobody's talking about it, and then selling the hype when everyone else is caught up in buying it, thinking the price will go to the moon. Anyway, none of this really matters because I figured out a way to capitalize on these market crashes. I went through the top 6 cryptocurrencies that I wanted to invest in, and I figured out how often they crashed, how far they crashed from their all-time highs as a percentage, and then that after each crash, they then went on to supersede their all-time highs. Are you hearing what I'm saying? After every crash, there is a massive bull run. So I developed a method of cost averaging into these crashes and then created an algorithm that took into account all of these metrics. To simplify the algorithm, I made it the same for each currency, so the calculations are constant across the board. Now, before I delve into how the algorithm works, give us a like on the video. Go on, do it. And subscribe if you want. Go on, subscribe! So, the algorithm, it works like this. Given that my top 6 cryptocurrencies crash at an average of around 90%, and I class the beginning of the crash at a 30% reduction of the highs, this is where we start buying in. So here guys, we have price per coin at the high. Let's just say it's £100, okay? And in this example, X, which is the amount that you're buying, equals £10. So first we wait for an initial drop of 30% from the high, which leaves us with £70 per coin. And then we buy X, which is 10. And then we wait for another drop of 50% and buy X again when price is at 35. So now we have £20 or dollars in the market, and we've cost average price per coin at this point is now around £50. So then we wait for a further drop of 50%, which gives us a price per coin of 17.5, and then we buy 2x. So this time we're buying £20 or dollars worth. So now we have £40 in the market. Then we wait for a final drop of another 50% to this price here, 8.75. We buy 4x, and now we have £80 in the market. And what this has done is this has cost averaged us at a negative 87.5% drop from the initial high, which means to just get back to the initial high price, we will gain 670%. So, if you had invested £1,000 by the end of this algorithm, you would gain 670% just by price re-reaching its all-time highs, which would give you a £6,700 profit at a total investment value of £7,700. Not to mention what you'd have when price supersedes the highs. For these cost average buying in points, you're going to want to set up some alerts on your charting software so you know when to buy in. I'll show you how you do it with Bitcoin. This is the daily chart. This is TradingView, by the way. This is the charting software I use. If you don't know how to use TradingView, you should probably take a tutorial on another video. Drop us a comment if you'd like me to give you guys a tutorial on TradingView. It is what most traders use for currencies and cryptocurrencies. Anyway, so what we do is we have a tool here that measures percentage drop or gain. So if I drag and take it down here, we can see that price went from the high and it went down to a minus 56% reduction on this crash so far here. So what we do is we measure 30% from the top, like I said. So here we measure 30% and we draw a ray line, which is a tool. These are all tools that I've set up. You can set your panel up however you like. Use the ray line tool, and then you can double click, edit this. You can put some text, You can put first buy X if you wanted. Okay, so that's there, the ray line is there. What you now do is delete this and draw another one, this time at a 50% drop down here, roughly. Get the ray line, let's put it over here, pop it in. If you want, you can label that one second buy, but I'll just leave that for now. And then another one at 50% from where the current price was, around there, lovely. Another ray line, and then once more, another 50%, which is here, one more ray line. So now you have all your buying points drawn on the chart. Just to prove that this is a negative 90% as per the algorithm, if we take it from the top all the way down to the bottom, we can see that it sits on about 90%. 91, I was slightly out of the lines there. But you can see that as negative 90% from the high, and you can see how these lines are spaced differently, because that's how it works when you cost average. You're doubling up every time, so you buy X, X again, 2X, 4X, and your cost average will be around about here, which is crazy really. So that's that. Now you want to set some alerts up. You click on the ray line, click the alert button, click create. You can set these to expire, or they'll expire after a couple of months anyway, unless you've got premium on TradingView, and that's it. As soon as the price goes through that alert, it will alert you. You can set up to your phone or whatever through the app, and it will tell you that your alert's gone off, and then you'll place a buy order on whatever you're using to buy cryptocurrencies, whatever broker that you're using. So you set alerts up for all of these. When price re-reaches the high, you've made all your gains. As I said, I've gone through all this data on lots of different currencies and found that most of the time they will smash through the highs and you'll make even bigger gains than what you originally thought. Just one last thing I forgot to put in is here is your 670% gain back to the top. That is your gain from your cost average, which is around this when you've bought in all these lines. If it was down here, it's 1000%, but your cost average will be around here at 670% mark. One thing to take note of is that every time the market crashes, there will always be news that will come out to say that cryptocurrency is dead, Bitcoin is dead, this, that, and the other. Don't take notice of it. It's the narrative every time the market crashes. Stick to the plan.